Welcome back everyone. We're live streaming sitting down with Michael Toma. We're going to talk about how to trade volatile markets. Good to have you here, Michael. How's it going today?
Fantastic. Crazy markets, and I'm excited to talk about them today.
For sure, we've got a lot of things. We've got the Russian war. We've got different things around. A lot of stuff to think about, and kind of makes it kind of unpredictable to trade. So what we'll do is we'll take your questions. You can make sure to post a question in the chat. We'll be able to answer your questions pretty soon. Let me just reload this. Make sure everything is working fine here. And okay, cool, perfect, awesome, that's good. So yeah, we'll answer your questions, of course. We'll go through these things. Michael has some things to share, a lot of experience in the market that he can share and teach you here on this YouTube live. So let's begin with what do you have in mind when you think about volatile market? Is it the time to be fearful, stay away, or what does that mean for a trader when the markets are volatile and crazy like these days?
Yeah, when we joined this profession as a trader, it has opportunity written all over it. I mean, this is kind of what we live for. What is it? The greater the boat rocks, the more the boat rocks, the greater your haul of fish. I mean, it really applies in trading. There are caveats, and we'll discuss them, but boy, this is kind of what we live for. It certainly beats those little dull markets where we're just sitting there watching screens and charts and candlesticks barely moving. So this is my dream world. This is what I live for.
So how do you decide if you want to trade these markets? Because a lot of people are maybe new to trading. They're not sure about how to trade these markets. Or maybe it's different from what they were used to. Like they're used to just buying and waiting, and then everything goes in their favor really quickly. How do they have to adapt to these kind of market we have these days?
Yeah, well, a good question. The first thing I really want to emphasize is, you know, this fear that we all have, or traders, or even just wherever in the world. Again, look at it as sort of opportunity. And for the newer traders, it's an opportunity to educate, to engage yourself, to say, how do these markets work? How do I adapt to this? You remember, Buffett's famous line, champions adapt. Well, look at this as an opportunity for education, all right? Whether it's in demo, very, very small account size. Look at this as an opportunity. These markets that are moving, there are certain things you have to do, but I highly encourage if you don't trade them, at least take the opportunity to get the speed of what are the nuances of volatility and how you can take advantage of.
Interesting. So let's kind of start and talk about. And by the way, we'll make sure to answer your questions if you guys are here. Make sure you say hi in the chat. I want to hear your thoughts, of course, and get to your questions pretty soon. But tell me, these market these days, how do you know what to trade? Because there's markets that are probably less volatile. There's markets when you have more things. There's markets that are maybe two extremes. How do you get to pick which market you kind of decide to trade on in this kind of
Yeah, I mean,
circumstance?
yeah. There's certain indicators like ADRs and things like that, average daily range. You could monitor those, but quite honestly, as far as an educator, it doesn't take much to look at some of these charts and say, wow, like look at these swings, that we're experiencing. But if you want to use certain tools to sort of alert you, ADR is kind of like your basic, platform tool that can kind of raise your eyebrows and say, these, these markets are moving much more, wider on a daily basis. And how do I take advantage of that? And how do I separate them from, like you said, some markets are not really moving at all. I mean, we don't trade too much on the bond market, but those things should be flying. They're kind of one of the more less volatile ones as opposed to oil, obviously, and a lot of the FX pairs, particularly now, the Japanese yen. I mean, it's, boy, what a move some of these FX pairs are doing. Again, opportunity, but we will talk about risk and how we can manage those as well.
So you kind of got two kinds of people in terms of these markets. You got people who want to focus on trading basically their strategy, like technicals only. And some people are going to look at the news because the news kind of these days really affect how the markets behave. You got the news from negotiations about the war, you get some movement. You got the news about worse things in the war, you get some movement there. Is the goal really following the news and understanding what happens with the news, or is it more about following your plan and really doing what you're used to and good at in trading?
Yeah, I mean, if you're a pure fundamentalist, pure fundamental trader, and there are outliers, and I tip my hat to them. They could probably teach me. But really, the biggest nemesis during this whole thing is having the news and watching it having an affect your trading plan. I'm a big believer. Just you have your plan, execute your plan. You may need to adjust certain things because of volatility, but do your best to just take the noise out of it. just look, focus on the charts, execute and trade your plan. Granted, we want to know what's going on, particularly with like scheduled news events, but really the chart is the chart, and we may have to widen stops or adjust things like that. But my thinking is, and we had a mastermind call with some of our students last night, saying do everything you can to just focus on your job as a trader, and that's execute a plan. Think about and listen to your words. As one of the students said yesterday, well, I was a little afraid to push the button because there was peace talks going on. You're letting that noise, that news affect your decisions. Some of the best trading opportunities occurred in the last 3 or 4 days.
Yeah, you're right, and it's something to kind of stay away because of the news. At the same time, you want to be aware of like what's happening and what's going on. Now, how do you trade? Is it better to favor these days? I'm supposing it's better to favor trending strategies compared to reversals, right? Because you could aim for like like choppy markets or like reversals average market. Is it performing as good as it was before? I think for me, not the same. It used to perform better than now. I think now we have these big trends, these breakouts that tend to go better. What do you favor in these kind of markets right now?
Yeah, I mean, the first thing, and again, when we say we adapt to certain market conditions, or we preach about market context, certainly the trending markets have the potential opportunity to outperform, and they have. I mean, it's very clear, and they're expected to. But if you have tight targets on a trending strategy, it's almost meaningless. I mean, you're really at 1-to-1 odds with your basic retracement, reversion to the mean type strategies, which by the way still work pretty good because you have a lot of excess, a lot of euphoria, a lot of traders trapped short, trapped long. Those are great reversion type trades. But when you think about the trend based strategies, which in my book now is kind of like the first level that I'm looking at, you have to start thinking trailer. And I'm not a big trailer guy. I like to take my money, set targets and be done with it, move on to the next. But these are the opportunities, these are the markets where you have the opportunity for a home run. And how many times have we had trend trading setups where we did pretty well, but that trailer, ended up stopping at break even? These are the markets where you want to go for it.
What's your favorite or like go-to trading strategy? I know you have one that you use a lot that you kind of showed me before. You teach your students a lot in the academy in the Ultimate Platform program. What's your go-to? Like, what's your preferred strategy for trending markets?
Yeah, for trending markets, and we have a strategy that we have, in the academy. We have a certain setup where we're looking for failure. We're looking for, say, a down move. We see that down move stopping, and this is like churn. Markets rarely just bounce in a V pivot type of scenario. We want to see that where shorts are trapped. Say we want to go long, and then we wait for this few other attempts to where the shorts can try and come in, and it's just not happen. Ask yourself this question without even knowing about the strategy: where are the sellers? Where did they go? How come they're not pushing it? And when you see that frustration, think of yourself if you were short on that side. Your frustration, saying, "Hey, how come this isn't working? The world is in upheaval, and all these things. These markets should be tanking." Think about as a short. Uh-oh. And when you say uh-oh, you have to start thinking about that trend base going the other way. Because when those shorts have to cover, whether it's equities, FX, commodities, look out. And I want to be on that side. I want to take advantage of the trader panic, and that's one of our top setups for myself personally, my family office account, managed account, and a lot of the students were taking advantage of it this month.
This is a good point. You mentioned the market never goes back in like a V pattern, like going down, coming back up straight after. I'm curious to hear more about this. So, how can you benefit from this? Now, you could go and trade trends, like you mentioned. You could go and trade reversals. How do you know if the market will go back in a trend or reverse after it kind of does this pullback?
Yeah, you don't. And one of the things I'm like really good at risk management and technicals. If someone told me where's the market going to be in 5 days, we have wars going on, and how do I know? And I really don't need to know. What I'm looking for, we have obviously price action patterns, things like that, but we'll put certain indicators just to show where things are failing. If we have, whether it's moving averages, stochastics. they all can come into play. But the bottom line is, if markets are supposed to be going down and all of a sudden they stop and they're just churning and they bounce, okay, continuation. If those continuations aren't happening, those sellers are getting exhausted. Want to take full advantage of it. These are great markets, unfortunately, to take advantage of newbie trader panic. So, come join us on the other side. Let's ride that bandwagon while they run out of the movie theater with the fire.
Now, I'm curious to hear because a lot of people are gonna want to wait for like a news to be in their favor. They want to have like all the things aligning for entering a trade there. I know you don't look at news at all. Like you don't put any emphasis on fundamentals and maybe news a little bit. Like you look at maybe the news on a bigger basis, but not like everything. And you don't want to have this for trading necessarily. How do you deal with that? How do you not use the news for trading? I'm curious to hear because for some people that's like foreign. That's a topic that they cannot imagine not using the news now to place trades. So how do you deal with
Yeah.
that?
Yeah, well, first of all, I look at it as trades to assess on a big sample size. So if I have, say, 75 trades and I'm going to review that in my trade journal, if I have one trade during the news that didn't work out, it's not going to make a big deal. And in fact, that's an opportunity with a really good risk reward opportunity that can kind of help that sample size. Over time, I know when I push the button, at minimum, I got a 50-50 shot, even if I just threw a dart at the wall. So, and using risk management with Edge, we can do that. So I wouldn't worry too much. The key is to, consider size and risk of ruin. If you want to get dabble in that, and I really, and this may be sort of maybe the minority group, but I want every trader to be engaged in these markets. And if there's news coming, like yesterday we had a big FOMC announcement, look at that as opportunity, even if it's a small size or even in demo. It's like 70, 68, 70% of these news events, the price reverts back to the price at right before the news event. It's exactly what happened yesterday. All right. Big swings. But sure enough, on the equity side, futures were down and right back there. That's edge. That's odds in your favor. And regardless of what's going on, news, whatever, I'm playing the odds. I have a 68, 70% chance. I am putting my chips on the table every time and let the edge play out over a big sample size. That's how you really progress as a trader in this business. Play the numbers. Don't worry about your television set.
If you have any questions, make sure you post below in the chat. We're going to answer your questions pretty soon. I know we have a lot of people watching now, but no chat so far. So I'm surprised to see this. Thank you very much, Raj. Raj says, excellent interview here. I appreciate your thoughts, of course. I appreciate your feedback here. So I want to ask you, we had a question about this recently in our mastermind group. I've seen this like a few hours ago before I logged into our video here. The question was about, should you whenever you have a target, let's say in a prop firm or something, you have a target, you have to reach, let's say, a $10,000 gain for your challenge to win, and let's say you're close to the end of that challenge. Is it better to kind of close your trades during profit now to kind of save that gain, or are you more a fan of like letting your trades play out, letting the trades get to the take profit completely, or just like close it, take your profit, then try to kind of get as close as possible to that winning of a challenge?
Yeah. I mean, I understand the human element. When someone's in a challenge, I mean, the ultimate goal is they want to get funded, and we're here to support them do that. So I don't want to get in the way of that goal. But what I also want to do, and we encourage the traders when they're in a prop firm challenge, is you're in a stage where you're preparing your resume. 5 years from now, when you have more money than you can even manage that you want, you're not going to worry too much about it, this event. So just trade the plan and really look at this opportunity to prepare your resume. If you go and start working for a prop firm, they're not going to care about your 1% or 2%. Just execute your plan, show that you're just executing it. And because if you kind of win the challenge on false pretenses, um, you know, you may have to explain that. But I'm also a default answer is to give yourself more time. If these prop challenges, if you don't hit that target, but you're sort of on a positive level where you get an extra few months to continue with your challenge and continue, take the few months. Give yourself some time. Try not to make it look like a contest, which I know a lot of traders try to do.
Okay, now this brings a good topic of, in this market these days, is it a good time to take a challenge with the prop firm, or is it a bad time to do that? Should you kind of attempt to get funded now, or are you better waiting later after the war is over, after things are kind of back to normal? Could you say?
Yeah. Well, let me answer this, Etienne. And we're both entrepreneurs. How many people are successful who have waited for something? I mean, the time for entrepreneurs, the time is now for everything. That doesn't mean you have to adjust, minimize. Risk management obviously is key. I mean, really got to keep size small here. This is, but the time is now. If you want to be successful in anything, push the button. I mean, let's go. The time is always now. There's never an answer that doesn't apply. Now, that doesn't mean we have to make some shifts, make some changes, and be respectful of market conditions or things going on. But life is so short. Push the button.
Yeah, that's a good point. Good point. At the same time, as a new trader, would you be afraid of making mistakes or kind of not knowing the environment you're in or stuff, or would you still kind of, because in the end it's a matter of, do you want to learn or do you want to kind of stay away and be kind of careful, which I understand you want to definitely learn, you want to be able to practice there. I think that's maybe a good challenge, a good way to learn also at the same time, learn different markets, learn how things work. It could be a good way to learn, and we don't have these things like all the time necessarily. They don't come every year, they come every couple of years, so why not make the most of
Yeah.
it.
Yeah, and don't do it alone. I mean, have someone, a support team, a group, a Discord, community, trader communities that can kind of help and guide you, especially the new traders. I mean, look at this as opportunity, but this is really an educational opportunity to really, really look at the benefits of risk management within a trade and with your entire trading plan. You can get crushed in these markets if you don't know what you're doing. But, there's also a lot of opportunity if you do it the right way. Let somebody hold your hand, walk you through it. It's education that you'll benefit for the rest of your life.
How do you learn to trade in different markets? Because that's something people talk about always. They say, oh, you got to learn these markets, you got to be able to adapt to markets. So how do you learn? Do you talk to traders who know these markets? Do you backtest on your own? Like, what are some ways to learn in these kind of markets?
Yeah, I mean, definitely the community element really leverages not just your education and knowledge, but the speed of which you gain it. There's always, obviously, I encourage screen time, taking a very open-minded approach, saying, wow, look at it as opportunity, not crisis. But really just learning from other people, learning from other traders. Obviously the coaching route is, something that we highly encourage. But yeah, it's getting that screen time and understanding it. And quite honestly, and this maybe differ from a lot of people, there's really not a lot of changes you need to do structurally from your strategies. Sure, maybe we'll lean a little more towards trend strategies in volatile markets, but really, it's all about risk management. Size is huge. When you put too much size on, and we've seen it even from some experienced traders the past few weeks, there's some accounts that may be blown up. You have to look at that risk of ruin. So if you're going to be learning in this environment, understand the concepts of risk of ruin. The goal is to be able to trade another day. It's very simple to make a commitment today, never ever ever to ever blow an account, even a small one. It's very simple. It's just math. Learn those principles. Don't worry about the candlesticks for now. Focus on, I'm going to learn the concept of risk of ruin today, and that will be so protective and help you in the long run.
Yeah, and there's something I want to ask you that was next. So Andre here was saying risk management is the key. Now we hear this a lot, but what does that mean? Like, what are some things we got to master for risk management? Sure, we got to position size. It's a big factor. You mentioned already the risk of ruin. Second thing, what else have to think about for risk management? And kind of how do we deal with that? How do we avoid blowing up an account? And how do we hopefully try to stay in the game for being able to take the profits in the market later?
Yeah, it's a good question. I mean, risk management, that's my sweet spot. So, but in biggest misnomer is all about stop management and where do I put my stop? This enterprise risk management is protecting your business, protecting your account. Risk of ruin we talked about, very very important element. But it really is thinking about the numbers. Bring the numbers into the game. Every time I push that button, I want to know historically, do I have an edge? And for me, my conversation starts around 61, 63%. if historically what I'm doing historically has had an edge of that amount, let the math be a part of this risk management process. Stops, very important. I'm not discounting it. But I see too many traders pushing these like 50-50 type bets, even if they're keeping their size small. You're just not going to get anywhere. So understand the math, and we preach ETN. I mean, we're backtest junkies. I mean, look at the backtest, look at those numbers, and understand where you have a mathematical edge. And our job as traders is just to take advantage of that edge. That's really what risk management is all about, a broader enterprise risk management approach to trading.
It's a cool thing when you talk to Michael, it's always based on data. So all his decisions here are based on data and actual backtesting and really things that he's seen in the market worked. Not like just one time and two times, but based on like a long term. I think that's really key. So that's really something you want to think about. What would you tell people who don't like data? Like for them spreadsheets is like something boring or not boring, but like they have a hard time to fill in a spreadsheet. How can they still get that aspect of being able to make good decisions in the market?
Yeah, I mean, I'm one who's in their camp. It is kind of boring. I mean, but also knowing how to do it, how to apply it. Again, the community element, you can delegate that task. I mean, if you just want to know, okay, where's my edge? Well, there are plenty of groups that can supply that to you. You don't have to do all the grunt work. We encourage journaling and things like that to give you a hands-on approach, get your hands dirty, and give you the process in which you can identify areas that you can improve or areas that are working. Again, with identify edge, but it's not. A lot of people just don't have that skill set, and then others have like coding backgrounds that can do that for you. I delegate that out. I'll let the specialist do that. A lot of my identification for edge I've developed on my own, but quite honestly, I get from community and things like that. Sort of like a trader barter type thing. You have the skill set. Can you help me with this? Hey, by the way, I'll show you some of these little unique things during FOMC or something like that can really help you get edge. Again, another really good promotional for like joining community, joining traders. Traders are cool to hang out with, so it's a fun thing. Don't do this alone.
I think people don't think about this enough. The fact that they can just give and kind of like exchange things to other people. You don't have to pay for getting all of this. Sure, you could pay. Like it's a good way, and I think paying is worth it sometimes. But there's a lot you can do with like exchanging things, services, things you can do, things you're good at, and a lot of traders, especially new ones, don't think about that much.
Yeah, I mean it's the ultimate definition of business savvy. I mean, and again, trading and even outside the trading space, it's successful people have this sort of business savvy. They're not, and we've seen it too, like send me your strategy or something like that. Like, ask yourself, what can I do for them? I mean, how many times, Etienne, we've done this where people are, they're just nice people and they kind of see that they need something, or do you have any advice? How many times did we say no? I mean, or we're always pretty open-minded and stuff. It's those who say, send me a PDF of your winning strategy and stuff. It's like, again, think about what the other person can do, what you can do for them. It's like a sort of like an internal business savvy barter system that works really well in trading.
Yeah, and you might think that you have nothing to offer because you're new to trading, you don't have strategies and stuff, but you still have a lot of experience and maybe other things that you can offer. And even if you have nothing, it's just about connecting this person to another person. Could be worth it. Let me connect you to this person who knows this, and then, then you can have that person.
Yeah, it's a lot of fun. I mean, such an isolated business, trading. Even for successful traders, just getting involved like that is pretty cool. And like you and I, like, part of the give back part of this business kind of keeps us going, keeps us fueled, keeps us energized. And it allows us to wake up every morning saying, excited about putting our opening up our platforms.
Awesome. Let's get some questions, and if you have any questions, make sure you comment below in the chat. So the chat is going to be, I think it's on this side of YouTube, so you can just comment there and ask your questions. If you're on the computer, something on mobile, of course, you can comment in the chat. We don't have a lot here, but we are going to try to make the most of it. So here we had a question from Raj asking, do you go long or short or both in these kinds of markets? And I guess that will depend on what you trade too. Like you could go long gold, but then you could go short something else. The S&P perhaps. So yeah.
Yeah, I mean, I'm an open book. I mean, I'll do anything. I tend, and this is my journals have identified this throughout my entire career. For some reason, it's just maybe a mindset thing, but there's always more shorts in my trade journal than there are longs. I love to see like panic and people getting trapped, traders getting trapped. Um, and now obviously lately it's been more on the long side because a lot of shorts are baked in and they're like, uh oh, they're expecting like, these again, watching the news, expecting the worst, and all it does is takes a little bit of spark in a movie theater and like everybody's rushing out the door. So I like to play both sides, but I tend to like it when longs keep piling in, and I look at myself, I go, okay, when's the time? Let's go. Now's the time.
Are
Good
you a big
question.
fan of kind of scaling in or adding to winning trades? Is it something you do or not so much?
Actually, I don't do too much, only because and maybe you can talk about the CTN too. I don't know, our traveling trader lifestyles, sometimes we focus on more simple, edge-driven, historical edge-driven strategies. Uh, Quite honestly, I just want to push the button and, you know, head to Costco and look for an air fryer or something. I mean, I really just like to set it and forget it. And I just very mechanical in my business. There are times where I want to average in, but again, I got to think of like the risk management element. The risk of ruin. I'm not averaging in because I'm down on something. And every time I get a you know, little gamble in me, and my track record is tops 50-50. It seems like those never work out. So um, I'd rather just set it and forget it. How about you?
Yeah, good point. And I was just thinking while you were saying this, like for me, what I find hard, and I'll be honest, is like being at the chart and looking back at the chart throughout the day many times is kind of tough. I'm looking at the charts now like maybe 4 or 5 times a day in terms of like every couple of hours, but more than that would be tough. Like I might be outside and I don't want to kind of go back inside to place a trade or look at the chart, because whenever you kind of add the trades, you got to be at the charts. You got to see how price goes, how far it went. Like can you put a stop loss somewhere in between? So you got to see the chart more, and I think that's something that can be a bit tough for a traveling trader. Now,
Yeah, and you
can you
don't
be as
need to. And you
successful
got
without doing that? Yeah, you could, but
yeah,
maybe there's a difference. But sometimes you're gonna be able to also succeed anyway.
yeah, and ask yourself the question. The traders should ask themselves, why am I adding? Is it to get an average better price? I anticipated that, or is it greed, or is it you know I'm averaging down because I need a quicker break even or something. Those are really good identifiers. And when I look at trade journals, I ask that same question. I said, what were they thinking here? Was it greed? Did they have, say, 3 or 4 winning trades in a row, and now all of a sudden they're adding? Maybe the confidence is getting too much. I look for those little nuances to identify areas that maybe involves a one-on-one sit down.
I think for a lot of people, it's the idea of getting to their goals faster. If they can have this one trade where they add more sides to it, then they can make 5 times the reward they get in one trade, and for them, that means they get to their goal faster.
Yeah. And what are they doing? They're thinking about the opportunity. Great. Here's the key in volatile markets. Think about the risk first. The opportunity is there. I mean, and actually there are probably higher opportunities now than there are in chop markets. Focus on the risk. Let the evaluate the risk, and if that meets your certain criteria in your plan, okay, now let's look at the opportunity. Not the other way around. I'm telling you, the ones who are successful in these markets, very clear that is the number one filter that I look at and say they clearly are focusing on opportunity. Just their words say it. Oh, these markets are great. They are. You know, where's your risk on these things?
Yeah, good point. Good point. Okay, we have a few more questions here, so I want to go through that now. So that's good. We had a question here from Raj was asking also, do we have a program? Michael is running a program with me at Desires Trade. It's called the Ultimate Prop Firm Trading Program. So we have, I think I've put a link below in the description of the video. So if you want to click on this, you can see all the details there. It's a program to get funded by prop firms, be able to scale up your trading to a decent amount where you can eventually quit your job, trade full time from this. So that's a pretty cool program. The results we have from people here is really good. They get funded in like as fast as 2 months and like between 2 and 5 months usually. That's your average for that. So be good if you want to be able to get up your trading, get funded by prop firm, and get to bigger amounts of capital in the future. So if the link's not there, let me know. Let me put it in the chat later. Alejandro just put it here. Thank you, Alejandro. Appreciate it. Oh, it's there. Cool. So you can just click on that link, not on screen, but in the description, and you'll be able to see the program. You want to add anything to this, Michael?
No, I mean we've had some really good success with it. It's we talked about the community element, which is sort of like a hidden value bonus that we don't talk about too much. A lot of back and forth, and we're always engaged. Every morning, first thing I do, open up my charts, but I want to attend to the questions or inquiries or some of the chatter that's going on, so everybody can prepare the right way for the markets that day.
Yeah, and this is a good point. For me, I've never really been successful with the course. Like I've taken many courses in the past for strategies, for things, and trading and other things as well. And there's always like this aspect missing of the human aspect and like the coaching aspect of you always have like issues, things that don't go well, things you're not sure about. You need to be able to ask someone. And I think it's really cool with like these mastermind calls we do every month. So people can attend these calls, talk with other traders, ask questions. Usually we pick a topic. Now, yesterday you talked about a pretty cool topic, and we have another call pretty soon as well. So that's really good to be able to talk and ask questions there. Plus, we have a Slack group, like 24/7. You can post the questions there in the group and kind of connect with people, also ask questions about anything you're struggling with. That makes it like a really good support system for traders. So pretty happy about this. It's awesome.
It's exciting, and just one last thing. Sometimes we're big, obviously big proponents of coaching, but sometimes traders and maybe some of the people in the group here, now is sometimes I just need to ask a simple question. I don't need this, entire. Go ahead, just ask. We're there all the time. We have coaches on both time zones, both sides of the world, so it's kind of a 24-hour. You'll get an answer right away.
Awesome. Yeah, definitely. Cool. That being said, let's go to Shivam, who's asking a question here about how do you remain objective while trading? What is your routine to maintain the mindset? And how much is mindset important for you after the method and risk management? So you go ahead, Michael.
Yeah, it's really important, and it's a skill set that really you have to build muscle. Like the mind is a muscle. And we have a lot of doctors and psychologists on our podcast, and you can watch those. They all say like it's a muscle you have to build. It does take time, and we kind of help you fast track that along. But yeah, there's a few things specifically like takeaways. Again, stay away from the news, stay away from outside stuff. The chart, everything's baked into the chart. So it's whatever's known is there already. An event comes up, then you just again trade the chart. So focus and really just even if it's like a few seconds a day, and just take a look and say, okay, this is a great day. I'm so blessed to be part of this business. I don't have to worry about a stinking boss, bothering me all day. But my job is to trade a plan, is to execute a plan. It's not about charts, not candlesticks. It's not about this. It's not about P&L. I just got to execute my plan. So that's that mindset. If you could just think about that as one step closer, boy, you are so far ahead of most traders that are struggling.
Good point. How do you remain objective? It's a good question because like there's always this emotion that come up with these thoughts that like you have to think about, and they try to hijack you. The goal is not to kind of eliminate these thoughts because you can never be like fully objective. I think it's really difficult, but you can try to kind of recognize those thoughts first and those feelings first, and then deal with them. If not useful, you put them aside, do something with it. But that's something you gotta kind of think about. You cannot eliminate emotions or thoughts or whatever. You gotta be able to deal with them and put them aside, journal about them if you want, but not kind of have them interfere with trading. Basically, that's the goal.
Yeah, and I gotta say, it is tougher, even for experienced guys like us. It is a little tougher in these markets with all the news going on, and there's such a bias to be short. It's like everything's down. You got your face handed to you, in the last few days, and not only maybe have you been stopped, but you didn't take advantage of a tremendous, at least in the equity markets, and also some of the dollar-based products. What an opportunity that was. But a lot of times the confirmation bias got in your way. Yeah.
The routines, Michael, I want to get your thoughts on this too, but I think it's like routines are good. People are like, you gotta meditate, you gotta do this, that, and this, and everything around. But I think there's a lot more value in what you don't do, or like what you try to avoid. Like avoid trading when you're rushed, avoid trading when you're pissed off, avoid trading when you're trying to get your goals faster, trying to get big wins. If you can just avoid these parts, I think you're in a lot better stage than if you just try to. Because whatever routine you can have, like meditation, sure, exercise, sure, but they're not really gonna help that much if you're in a bad mindset when you come into trading anyway after.
Totally agree. Totally agree. I mean, for some reason, and maybe it's our industry, we've got this notion that trading is trading, pushing buttons, is having activity. But really, a lot of trading is waiting. And I use this phrase a lot, but we are paid to be patient. It really is true. Patience is like a paycheck in itself, and being picky on price and entry and stuff like that. So again, it takes a lot of handholding development. We focus on that with our traders. But you see, like the ones that are just more patient, and it's okay to miss things. It's good. Staying out of things is a very good. It's one of the most forceful things that really, when you look at a year's trading journal, you say, wow, if I only think about the traders who maybe had a rough month or something, if I only stayed out of that little thing, it would have made my year. Well, we're paid to
Good
be
point.
patient.
Awesome. Good point. Here we had a question from Musa asking about out of interest, can you share your average win rate and reward to risk ratio? It's interesting to see how pros compare to the average trader.
Yeah, good question. Well, there's a big range because it depends on the product, the strategy, and also personal and managed account. My managed account has somewhat parameters that I need to do, but some of the strategies about 24% win rate. But again, uh, and others like a lot of my trends is generally my sweet spot is around 68 71%, at least historically. But again, it doesn't mean much because it's the risk reward ratio that matters. So if I have, say, and one of my strategies like in an options premium selling, that success rate is about 89%, 88%. But it should be because my risk reward is about 1 to 2. So, but again, the thing I want everyone to focus on is, and that question, it's a great question, Lisa, is what is your profit factor? That's the one key performance metric that a lot of people have on their platforms. I want you to start focusing on because profit factor factors in all of that. Doesn't matter if you have a 10% success rate, but your profit factor is like 1.6, you're going to have an equity curve that's going to build your account, get you in the door in prop firms and everything else. Those are two, the risk reward and average just depends on the strategy. Again, profit factor, most important.
Yeah, maybe you can just explain what profit factor is good, what is a bad profit factor. Like, when is it negative, when is it good? Maybe you can just explain that for people to understand.
Yeah, and if if you're not familiar with it, you can look in your platforms. Most of them will have that when you do your sort of back test or your trade journals things. It basically encompasses all the information where you could say, on average, if I have a 1.30 profit factor, it means on average I'm making $1.30 for every time. On average, I'm making 30 cents on every trade net. So you're gonna have losing trades, you're gonna have winning trades, but that really shows if it's more than 1.00 means you have a positive expectancy. So it's just a question of like rinse, wash, repeat. Keep doing that. I like a sweet spot of around 1.3 to 1.8. Most would think, well, the bigger the better, like 4.0. I kind of question the sustainability and the risk management protocols in getting that. And by the way, risk management people in the prop side, which I also do consulting for, that also raises a red flag. I'm not sure if I want that trader on my team. So take a look at it. 1.3, 1.5, 2, even 1.15. If you have a lot of occurrences, you can have a nice smooth equity curve. That is the perfect resume to get funded.
Yeah, good point. And I really appreciate you sharing these thoughts here. That's good. People can use that for later. Cool. Yeah, and for me, just to answer the question about the win rate, I'm more around like 48%, so I'm definitely lower than Michael. But again, this is like reversal, so it's like 2 to 1 of reward to risk after. So it's definitely different. But yeah.
ETN and I have like very different styles.
Yeah.
We're like two different, but you know what? We both, at the end of the period or month or whatever, we kind of just our equity curves look very similar, but risks is different, rewards different, our strategies are different. That's the beauty of trading. Two different styles, and you preach this all the time, is that there's so many different ways to do this, and
Yeah.
we laugh, chuckle sometimes, like, how'd you go short? I was long, but at the end of the day, we're both, our risk management allows us to be successful. So
Yeah. Anyone who says there's only one way to make money trading is completely wrong. So there's so many ways, so many strategies, so many techniques and tools and stuff that you just do what works, and then that's it. Okay, cool. We had a question here from Sheila asking, do you do any position trading? So I believe that's when you hold trades for weeks and months and like long term.
thanks, Sheila. Welcome. Yeah, yeah, I do have some. It's not really a big part of. I'll take some longer term positions just because, I'm human and I do have sort of a fundamental bias on certain things when things are really oversold or things are really overbought. Um, so I'll have a very small portion. Only on my personal. The manager doesn't allow me to do that. So, but I do. But I got to tell you, Sheila, and I was thinking about this, looking at my journals, like my summaries. Last month I did the 2021 summaries. My track record is not that good. It's average at best. So I say, can I deploy that capital to more of the trading stuff that I do? I'm reevaluating that. So it's average at best.
Cool.
Not my
Yeah, I do take some longer term trades, but they're not really trades, are more investments on things like stocks, like index, but not really Forex or stuff like that.
Yeah.
Not really crypto either, but yeah.
Yeah.
And it's a small portion. It's like money that you have saved up that you don't use for anything else, so you can use it for that. So it's not like really a main source of income or anything.
No, actually, last year crypto was one of my best position trades ever. But when you evaluate, you look at it and say, you know what? If I held this, I'd be back to break even. I mean,
Yeah.
not lucky, but it just. I mean, I did push the button, but yeah, I can't be relying on that type of stuff. But
Awesome. Cool. Here we have Ronnie. I remember Ronnie had questions before a long time ago when we did live. Ronnie was asking about, do you use the 1 minute time frame combined with 5 minutes, 15 minutes, or do you use higher time frames for trading? Now, again, we're different on this, so I'm curious to hear you first.
yeah, well, now I'm as I get older, I notice my time frames are increasing more and more. Yeah, but I'll tell you, the shorter. Let's look at the math. The shorter time frames. Well, let me ask your question. The 15-minute 60 is kind of like my sweet spot. There's two reasons. One, the math plays out for me on the back test. I'm able to do better risk management with that. I can place a stop where I know I'm wrong. Where on the shorter time frames, there's much more noise. So it can be successful, but you have to accept the fact that you may be, quote, right, but you'll still get stopped out a lot. And that creates a lot of mental frustration for a lot of people. But if you accept that, that's fine. There's a lot more noise, not more true flow. I can't take advantage of the markets that way. The other thing too is, the side thing is, and I want your thoughts too, Etienne, is for me that 15 and 60 or 60, in the daily, it really allows for my trader lifestyle to play out. I can be just as successful and maybe even slightly better if I'm not scalping, and I don't have to worry about it. I can travel, be on a plane in a couple of days. I just don't have to worry about my positions. Just let the whole thing set it and forget it. To me, that's my sweet spot from a edge perspective, but also from a lifestyle perspective.
Interesting. Now, I gotta say, I hate the 15-minute chart because it's like in between two things. I feel like it's like trying to be two things at once. If I'm gonna day trade, which I do a little bit now, still on the Asian session, I like 5 minutes because like 5 minutes you have like a faster pace. Like you don't have to wait 2 hours for a trade to unfold. You can just like take it, like stay there 2 hours or so, like 1 or 2 hours, take the trade, then you leave after. If you gotta wait 15 minutes, like you can have a long like list of candles that you have to wait for, and that kind of adds up really fast. So I'm not a fan of that. Other than that, for me, it's 1 hour, 4 hour chart. That's my best kind of trading time frames.
Okay. And again, another example of there's so many ways to do this. I mean, we should really promote and embrace that. There's
Yeah.
not a like this chart, that chart. It's just that's the cool thing about this business.
But I'm curious to hear how you trade on the 15-minute chart, though, because like, what's your routine like? Do you stay there, do some other work, you look at the chart from time to time, or how do you kind of keep that open and look at for trades in the 15 minute?
Yeah, I mean, a lot of my charts too. I mean, I'll have the charts. I really don't use candlesticks that much, but I'll have like the chart formations. But I'll use really like volume-based information, like profiles and things like that. But really, the 15 minutes just sort of, I don't look at like when the bar closes, I do this. So it's not about every 15 minutes I have to look at it or derive it. I just find that the 15-minute, maybe even the 30, gives me a really good bird's eye view of what's going on. I don't see all the noise, and at the same time, like a daily is just, you could have like 100-point S&P future swings here and a daily, and it looks like just an inside day. That 15-30 kind of gives me a broad perspective, because one of the things I want to really have traders think about is when you get into the smaller time frames, everything looks like a little candy store. Like there's opportunities all over the place. Take a step back and say, hey, we're making lower lows, on the 30 or for the last 6 days. My 1 minute and 5 minute may not be showing that. So I just find it it's that great arrow view that gives me a perspective of market context, a very, very key important element of edge, and what we teach a lot in our programs.
Awesome. Good point. Yeah, I'm curious to hear that. So you place your orders in advance, or how do you enter trades in that case?
Yeah, a lot of times, in live market trading, I want to look at other internals, volume, things like that. FX has some little more limitations regarding internal, mechanics, but yeah, I tend to set it, and I want price to come and like smash my order, so to speak. I'm not worried about like, well, let me look at certain things. Yeah, on a shorter time frame, and I do scalp, by the way, too. I like to have a little lunch money, develop some green during the day. I'm a trader after all, but yeah, I like to generally, my confirmation for me is that price at a certain level. When price comes down to hit that is my confirmation. So yeah, I just set it and forget it.
Cool. Interesting. Andrea here has a nice thought. He was saying he found out it's a game changer. The thought was, instead of seeking pleasure, seek to avoid pain. That's a good one. I like that.
Love it.
That makes sense.
Love it.
Awesome. Francis says, happy St. Patrick. I didn't know it was St. Patrick today, to be honest. So thank you, Francis. I appreciate it. Happy St. Patrick to you as well.
Yes.
Here we have a question from, this is a good one. You guys are living from trading, but I have a fear that what's going to happen if trading will not work out same as now. How to overcome that fear. So basically the question is, you see in the future, you think, oh, now I'm making money trading like really good. I have like all this kind of sort of paycheck every week or every month. What if it changes in the future and I cannot adapt and I'm stuck and not making money from trading? Michael, I want to hear your thoughts on this. I don't think about this often myself. Not something that I really worry about. Mainly because I have other incomes, other streams of income that are kind of buffer for that. But I want to hear your thoughts.
Yeah, I think I had to take a little breath before I looked at this. This is I would love to have a conversation with you, Prashant. It's when we talk about fear, like just the tone when I'm looking at the question, as I have fear about what's going to happen. Stop at the word fear. Fear is opportunity. All right, and fear, we look at it as like, I'm going to touch the stove and it's hot and I'm going to burn myself. But really, fear creates this opportunity in markets. The only fear that I have, and ETNs too, we have multiple business lines and streams. I'll be honest with you, the only thing I fear is from a really big like business risk standpoint. Like markets are closed for 3 months. If that ever happened, yeah, then I have a strategic problem on our hands, But if markets are open and I don't know, I have much more things to focus on in my business plan about execution than is important. So my like summary to your question, and it's a really good question, and it tells me that how do you come that fear is embrace this beautiful opportunity that's presented to you, and also, what is that fear all about? Something's behind this question, and you get a good coaching session that we can probably identify what it is and overcome it.
Yeah, good point. We had a question here. So, what session do you trade? This is again some place where we differ. I prefer the Asian session. Michael, I guess you prefer the US session. You're not gonna trade at night for sure in your time zone. How do you deal with this when you're traveling? when you're like and traveling? I mean, like in a different country, overseas, in Asia or something.
Yeah, it's you have to adapt to it. Technology plays a big role, so we can set alerts. A lot of my trading mechanics is alert driven, so I don't have to look at 50 charts. I'll just go through them and set certain alerts. So when price hits those alerts or internal tools hit a certain alert, like an RSI or something, it just gives me the trigger to start looking at something, and I have to remember what my alert was for. So, but I trade. I'm on the U.S. side, East Coast, so New York time. So I love the pre-market, and usually the first half of the day is kind of like my sweet spot. It's where I can find the most opportunities, and then a lot of times in the afternoon, daily session is East Coast is. I'm just either monitoring positions, and seeing like do I have to move stops and things like that. But when
Awesome.
I'm in Asia, yeah, I kind of like that session too. The technology plays a big role in that regard.
Cool. Awesome. Okay, we have a question here I got to address about the price of the program we were running together, the alternate profit trading program. Now, I just want to do this because it's kind of funny, and when I do the math myself, I'm like, I'm like shocked at how cheap it is for the program. Maybe you think it's expensive. It's possible. Let's just kind of get to the math together. I'm curious to hear your thoughts, of course, Michael. So the program is currently selling for two payments of $599, or one payment of, yeah, roughly the same, like 1,100 something, whatever. So okay, now if you look at what's included in the program, we give you pretty much a free challenge for FTMO or the 5%ers. Right, so that's already a big deal. Let's say you cut out $200 for that. If you pay for the challenge yourself, you would spend $200 in the challenge. Okay, we'll have $1,000 left of things to justify. Now you get the course, sure, you get the coaching, I mean the mastermind calls, you get the Slack group. Let's think all that stuff is like not included in the price of stuff. Let's think about what will happen if you get funded by prop firms in, let's say, 2 months from now, 3 months from now, or whatever, and you're able to trade with them. And let's say you're able to make, and by the way, the 5%ers is a 24K challenge, $24,000 you get from the prop firms if you get funded. Michael, I need some math, but let me just do it here quickly. 24,000, and let's say in your first month you're able to make 3%. Right? It's a simple amount. Okay, that's $720 for that. Then you pay the prop firm charge, the fee for the prop firm, so you get around $500 on that first month of being funded with that prop firm. 3% a month, I think it's pretty achievable for someone trading with a prop firm, like with a decent, of course, kind of risk parameters and stuff. So that means that in 2 months, you pretty much recover your investment and all the rest is profit after. Now, the goal of this program, of course, is not just to get the first challenge and live from it. It's to be able to get the first challenge, get funded first with like $24,000 or more. And then from there, you're able to take more challenges. It's part of the capital. You mentioned a lot, Michael, that it's not about just getting funded once and then you're done with it. It's about, first, yeah, you build your capital with prop firms, but then you want to also diversify and kind of build your own account and or also find investors, like private investors. The prop firm program teaches you how to do that step by step. So you're able to kind of learn these skills. So I think over time, it just pays for itself so easily. We could charge like probably even $5,000 for it. Would still be cheap to me. So I don't know. I'm curious to hear your thoughts, Michael, on this.
So, well, sometimes I chuckle because I was like, why am I doing this? Like I love it, I enjoy it, but really, I mean, yeah, I mean, we got to talk again. But no, I mean, but one of the things, like little simple things, like think about the value, but think about how many trades went the wrong way, or maybe the bad week, the bad month. How much did you pay for that? And look and say, I put a post last week about to the group and I said, hey guys, be careful. Remember, if you're trading Aussie dollar, a lot of it is tied to gold, and gold looks like it's losing some steam. Some guy wrote, "You just saved me $2,100." It was just a post. I said, "What are you talking about?"
Awesome.
That post you put the other day. I say, "What post?" I just, so things like that, like little quirky stuff. So when we talk about yes value, but I don't know, think about how much some of these bad trades or bad risk management decisions that you made. And quite honestly, like I'm a sap. Like if you need to, I'm available at all times, and we have certain parameters, certain limits, but some service that we provide. But if you tap me on the shoulder, I'm here for you.
Awesome. Thank you, Francis. For instance, says quality worth paying for. Appreciate this. Cool. Awesome. I appreciate you guys who are in the program already. So I think we have Andres in the program and Francis here. So I appreciate you guys. Cool. Let's get to the next question here. We have, what's your opinion on using futures as an indicator for individuals, for trading individual stocks?
Oh, that's my wheelhouse. Who's don't
Go
know
ahead.
443. Love it. Yeah. A lot of times I'll use. I do trade some equities. It's about 15-20%. My option side, I sell premium on equities all the time. But yeah, if I'm looking at a Microsoft or some of those like key the FANG stocks, I definitely want to see the futures. I want to look at things. So if I look at if I see this oversold or overbought, or sellers are like trying to push it and they're not happening, and I want to go long, I'm going to use that as my proxy. That's one of my biggest confluence indicators that I use for trading individual stocks. And that's a game that's not like the predominant area where I specialize in, but my edge and my numbers are there primarily because of the futures markets. Not about moving averages, not about stochastics. Using futures as an indicator, oh, love it. I love the fact you're even thinking that way.
Awesome. Cool. I know we're already running an hour in, but if Michael, you have some time, we can still continue. And I think we have a lot of questions here that are pretty good to answer, so I'm good with that.
Sure.
Time goes by so fast in these live; it's crazy.
I know.
Cool. Here we had a question, and this is going to be a funny one. I mean, funny or like complicated one. What is the most important thing I need to know before getting into trading as a career? Now, Michael, I want your advice, but you cannot answer it's a business because Andrew said that before. So what's the most important thing someone has to know before they get into trading as a career? Go ahead. I want to hear your thoughts.
Yeah, trading as a career. Understand that, first of all, this is not your typical job in the sense where you're going to get a paycheck every week. It's kind of like sales, where your commissions, so to speak, is going to vary. You need to understand that. And by the way, also your significant other, people in the household, they need to understand and support the fact that this is a business in that regard. All right. Also, understand when you are getting into. Let's kind of give away a nice little takeaway. Stop the fact of getting into trading as a career. You are now a project manager. Your job is to execute a plan. The trader thing has so many little nuances about markets and this and picking direction. You're in a business of executing a plan. Just like a construction guy on a construction site. Start nailing these boards and do it this way as the plans say. That's how we get paid. So think of it as this is a career that I've just got to focus on that. Let all the sort of green and red lights, put those aside. If you can start thinking of that mindset and not be lured by like the trader type of mentality, that is the first step for you to taking a big leap to being on the right track to really being successful in this business.
Awesome. Good advice. One more thing I want to add, though, is the fact that in trading, like your results are primarily dependent on how you show up. If you show up every day, you get results. If you don't show up every day, you get different results. If you show up every day in a bad mindset, you get bad results. Different results, of course. And if you kind of show up half, you're not like sure. If you show up with no plan, you get no results. So you got to show up in the best you can, and that includes your strategy, right? That includes your mindset, and of course, that includes how you deal with things when they happen and being able to adjust.
Yep. You have to invest the time. You have to put the effort in and be focused and saying, I'm going to succeed. That's it. I'm enough of this stuff. No more of the hopping. I'm making a commitment. Commit to yourself.
Awesome. I want to go with the question here from Francis, then we can move on to other questions after we had before.
Yeah.
Francis is asking, with the Moscow exchange being closed for the past 2 weeks, what kind of opportunity does this show for you, Michael, when it opens? Where could Russia be in 10 years? Good question.
Good question. Here's my answer. I have no clue, and I don't care. Like from a trader perspective, from a human perspective, I care a lot. From a trader perspective, could absolutely care less. But I will tell you this: I would actually be very interested if the Russian the ETF for the Russian currency. I even forgot what it's halted now. I would only be thinking long. I would actually think me going long only because everybody is thinking this thing is going to zero, and I want to be on the other side when these traders panic to do it. But again, once you start closing exchanges and things like that, I don't want to be trapped. I mean, that's just there's so much opportunity in a better space, and also it hints that I'm kind of factoring in news into this decision, and I don't want to be a part of it from a trader perspective, of course.
Awesome. Good answer. Yeah, it's gonna be funny to see how that play out in the future, of course.
Yeah.
Cool. Here we had a question that I will answer. Question about the Bollinger Band reversal. Joseph was asking question regarding the Bollinger Band reversal strategy. The markets are trending now a lot currently. Have you been finding it hard to find trade opportunities? Yes and no. Like, we have some pairs that are really good. I had two really good trades on the Euro CAD recently, and I might share my screen to show you that quickly. But then other pairs like the Japanese yen, US Japanese yen is really trending, stuff like that. So let me just share my screen. It'll take a few minutes. Cool. Here we go. Share.
Awesome. Great question, Joseph. By the way, I'm looking forward to this.
This is more advanced, so it's stuff I like to talk about for sure. So I appreciate that. Awesome. So let me just move your question here. Awesome. So we had a really good move here on USD Japanese yen. This is something that I cannot really trade myself because of the strategy I have, much more difficult. Regarding the Euro CAD, we had two really good setup here recently. So one over here in the past. This was like last week, actually on the 7th. So some time ago. Really nice setup on the 1 hour chart. So right over here, just gonna make this bigger. And again, this is a typical setup I like to focus on. Wait, let me just go back on the right time frame, 4 hour chart. So really good setup here. Again, this was like when price was going down before for a long time, came back in reverse right at the support. This is a good support at 1.38. So that was a good one. Then we had another one. This one, so this is like another kind of lower probability zone. I'll just show you on the daily chart so you can see what it looks like. So you have our support here. This is the 1.38. This is the main one. Price was there a long time ago. Back over here. So December 17, and that's a long time ago. And then what we have is basically, I was looking at the previous support to become a resistance. Now price just barely went there. You'll see on the, actually yes, even hard to see. You'll see if you go on the forward chart, how price just barely touched that zone here, came back to retest, and we had a nice setup here on the 1 hour chart. So we have good setups. We have both. And we just have a good setup on GBPUSD now, just now. So if price breaks the low here, I'll enter. But if not, I'll stay away. So we still have some setups. Just depends on which pairs. But we still have both things. So you can still trade that. You just got to select your pairs and things carefully.
Right. And good risk management, obviously. I mean.
Yeah, of course.
Yeah. Sure. It's key to everything. Yeah.
Okay. Cool. Cool. Awesome. Great. We had a question here before that I skipped regarding the. We get this question all the time. I've been training for about 1.5 years now, but still struggle with consistency. What can I do to improve my trading? We get this question all the time, question. So you should be used to the answer.
Yeah, actually, it may be simple, maybe not, but really the first thing on this step is, first of all, the fact that you're still engaged and doing it and you're struggling shows me that there's a commitment level. So that's kind of, we'll put that aside. So kudos to yourself. The key is the identification process. What is it? What is the root cause of this inconsistency? Is it markets? Is it the strategy? Is it yourself? What are some of the things? Is it FOMO? Is it? There's so many variables. So the key is to identify the root cause, and that's not easy sometimes. I mean, it's not just, it doesn't always surface in a trade journal. I mean, we do analytics. There's some stuff where we really get into, like, I can get a feel for the emotional elements just based on a trade journal, documentation. So especially after a series of wins, losses, things like that. Is it trade size? Once you identify these things, then what we do is we transfer those things that we identify into a developmental type plan. And each item in your development plan has action items. And again, you don't have to do this alone, but action items to address the issue and to see if the numbers are starting to curtail out. We just had a mastermind call yesterday on this gap concept, which we'll talk about in the future. But really, it's about your back tested results versus your actual. What's the reason for that? In this situation, we'll identify, assess the things, and put action items to make sure we address those things. And you'll see the numbers will start to change as you address those items. Great question.
Yeah, one thing I like to do, and this works well for a lot of people, is to kind of rank yourself on different areas of trading. So rank yourself on your strategy out of like from 1 to 10. How good is your strategy? If it's not profitable, maybe it's not good. Then you rank yourself on your execution, like in your mindset. How can you execute your trades? You take the right trades. You overtrade. You have a lack of discipline. Rank yourself there. Then on your risk management. So how good are you with that? Are you blowing up your account? That's a 0 out of 10. Are you kind of taking impulsive trades and increasing your risk for no reason? That's also a kind of low score out of 10 for sure for risk management. Then you pick the lowest one, and then you try to work on it. You focus on that aspect for a month or 3 months if you want. Like 90 days, focus on just that, try to improve that. And then you try to bring your score higher a little bit. Then you can focus on the other areas after. Because if you try to kind of work on everything at the same time, it's just going to be painful. It's going to be too hard. It might be also like too confusing. You have all these things to work on and think about. But if you try to only focus on one thing, then you have less things to worry about and just that thing to focus on. So that works really well for a lot of people I've seen. Okay, cool. So let's see what we have here. Another question. I think that's good. I think we covered all. So we had here Shivan was saying journaling and reviewing is important for consistency, trying to avoid what's not working for your personality. Good point. Very good point. Awesome. So Michael, any last word of advice? Where can people find you? They'll connect with you or reach out after this YouTube live.
Hey, just I mean, we can just go right to Desire to Trade. Send us a note right through our site, and let us know if we helped you today, and if you're interested in how we can help out, that's even better. We're a tight knit community, and really have a passion for trading, and we really get a kick of seeing like traders turn the corner. And if there's something you're missing, one little piece of advice is sit back and say, is there any way I can identify myself? What's going on? I see, myself struggling, but I have the passion. All right. What can I do to take the next step to say, all right, I got to take this seriously. I'm going to identify what's going on, and I'm going to work to make sure it happens. And I will get involved in any type of community. It doesn't matter, to learn from other traders, get immersed from other traders, and see if I can get to that next step. But the key is commit, commit, commit. It's a great business, great markets, great opportunity. Try and find the missing pieces, and it's a step-by-step process.
Awesome. If you want to scale up your trading to roughly like $4,000 a month, where you're able to quit your job and kind of live from trading by leveraging prop firms, we have a good program for this. So check out the link below for this. You can join the program, learn more about it, all the details there. See if that's a good fit for you or not. See if you're able to use that or not. Then it would be awesome to work with you, of course, and have you in a team. Michael works hard on this. I work hard on this also. I want people to succeed and get results this year. So we'd love to have you in, of course. But have a look at it first. If that's a good fit, then let us know, and we're happy to bring you on board, of course, in the future. Awesome. Thank you, Michael. I appreciate your time and your efforts here. I know this was a lot of questions, a lot of good advice, of course. And we'll catch you back here pretty soon, I hope.
Yep, my pleasure, E. And thanks for everyone. And E, I'll see you in the room shortly. Markets
Awesome.
are live, so I love it.